Question 1. Policy structure. Which of the following statements best describes the difference between a level term life insurance policy and a decreasing term life insurance policy? A. A level term policy provides a fixed death benefit throughout the term, while a decreasing term policy has a death benefit that decreases over time. B. A level term policy has a death benefit that increases over time, while a decreasing term policy provides a fixed death benefit throughout the term. C. A level term policy is only available for individuals over 50 years old, while a decreasing term policy can be purchased by anyone. D. A level term policy is a type of permanent insurance, whereas a decreasing term policy is a temporary insurance solution. Answer A. Explanation. Option A is correct. In a level term life insurance policy, the death benefit remains constant throughout the policy term, meaning beneficiaries will receive the same amount regardless of when the insured passes away during that term. In contrast, a decreasing term life insurance policy features a death benefit that diminishes over time, often aligned with a financial obligation such as a mortgage. Option B is incorrect because it misrepresents the nature of the death benefits. Level term does not increase, it remains fixed. Option C is incorrect as there is no age restriction on level term policies, making this option misleading. Option D is incorrect because a level term policy is not classified as permanent insurance, so both policies are forms of temporary insurance. Question 2. Claims process scenario based. Mr. Smith has a term life insurance policy that he purchased 10 years ago. He recently passed away unexpectedly. His family is filing a claim for the death benefit. However, during the application process, Mr. Smith had failed to disclose a pre-existing medical condition. What are the potential consequences for the family regarding the claim? A. The claim will be automatically approved because the policy has been in force for over 2 years. B. The insurer may deny the claim based on the misrepresentation, but the family can appeal the decision. C. The insurer must pay a reduced death benefit due to the non-disclosure regardless of the circumstances. D. The claim will be denied and the family has no recourse due to the pre-existing condition. Answer B. Explanation. Option A is incorrect. While the 2-year contestability period generally protects against claim denial based on misrepresentation, it does not guarantee claim approval. If the insurer finds evidence of material misrepresentation, they may still deny the claim. Option B is correct. The insurer can potentially deny the claim due to the failure to disclose a pre-existing medical condition during underwriting. However, the family has the right to appeal the insurer's decision, which is a common recourse in such cases. Option C is misleading. The insurer is not obligated to reduce the death benefit solely because of non-disclosure. They may deny the claim altogether. Option D is incorrect as the family can appeal the insurer's decision and may present evidence or arguments that could lead to a different outcome. Question 3. Underwriting process. In the underwriting process of a term life insurance application, which of the following factors would most likely lead to an applicant being classified as substandard? A. The applicant has a history of non-smoker status but engages in high-risk hobbies such as skydiving. B. The applicant is a 30-year-old male with a family history of heart disease but maintains a healthy lifestyle. C. The applicant is a 40-year-old female with no significant health issues but has a high-stress job. D. The applicant is a 25-year-old female who has recently gained a significant amount of weight. Answer A. Explanation. Option A is correct. Underwriting typically assesses both health status and lifestyle factors. An applicant who engages in high-risk hobbies like skydiving may be classified as substandard due to the elevated risk of injury or death associated with these activities. Option B is incorrect. Although family history of heart disease is a factor, the applicant's young age and healthy lifestyle may mitigate the risks associated with such a history, likely resulting in a standard classification. Option C is incorrect because while high-stress jobs can impact health, they do not directly translate to a higher risk classification without other underlying health issues present. Option D is not automatically a reason for substandard classification. Weight alone, especially without additional health issues or related conditions, does not typically determine the underwriting classification. Question 4. Evaluating insurance needs. When assessing a client's insurance needs, which of the following factors is most crucial in determining the appropriate amount of term life insurance coverage? A. The client's personal preferences regarding investment options. B. The client's current salary and future financial obligations, such as a mortgage and children's education costs. C. The insurance company's reputation and market share. D. The client's age and gender alone. Answer B. Explanation. Option is incorrect because personal preferences regarding investments are not primary factors in determining life insurance coverage needs. The focus should be on financial obligations and needs. Option B is correct. The appropriate amount of coverage should reflect the client's current income and anticipated future financial obligations. This ensures that dependents can maintain their standard of living and fulfill financial commitments after the client's passing. Option C is incorrect. While an insurance company's reputation may influence the decision to choose a provider, it does not determine how much coverage is necessary. Option D is also incorrect. Although age and gender can influence premiums, they do not directly determine the amount of life insurance coverage required. Question 5. Unique aspects of New York term life insurance. Which of the following is a unique aspect of term life insurance policies specifically in New York? A. All term life policies must include a cash value component. B. Policies are required to include a grace period of at least 30 days for premium payments. C. All policies must provide a guaranteed renewable option regardless of health status. D. Policies can only be purchased by individuals over the age of 50. Answer B. Explanation. Option is incorrect because term life insurance policies typically do not have a cash value component. That feature is generally associated with permanent insurance policies. Option B is correct. New York law mandates a grace period of at least 30 days for premium payments, ensuring that policyholders have time to make payments without losing coverage. Option C is incorrect. While many term policies offer a renewable option, it is not universally required in New York law for all policies, especially if the applicant has health issues. Option D is incorrect as there is no age restriction on purchasing term life insurance in New York. Individuals of any age can obtain coverage. Question 6. Theoretical knowledge. In calculating the present value of a term life insurance policy's death benefit, which of the following concepts must be understood? A. The premium payment amount and frequency. B. The interest rates used in the discounting process. C. The mortality rates only without consideration of time value of money. D. The future cash flow only without considering present obligations. Answer B. Explanation. Option is incorrect. While premium payments are important for ongoing policy costs, they do not directly factor into the present value calculation of the death benefit. Option B is correct. Understanding interest rates is crucial in the present value calculation as it reflects the time value of money, how much a future sum of money is worth today. Option C is misleading. Mortality rates are relevant for underwriting but do not affect the present value calculation directly without incorporating interest rates and time. Option D is incorrect since future cash flows must be analyzed in the context of present obligations and time value. Focusing only on future benefits without present considerations is inadequate. Question 7. Regulatory environment. According to New York state regulations, which of the following statements regarding the underwriting process for life insurance is true? A. Insurers are prohibited from using any medical history in their underwriting decisions. B. Insurers must disclose to applicants any specific medical conditions that could lead to higher premiums. C. Insurers can refuse coverage based on non-disclosed health issues discovered after the policy is issued. D. Insurers are required to inform applicants of their right to request a copy of their medical records during underwriting. Answer D. Explanation. Option A is incorrect. Insurers are allowed to consider medical history as part of the underwriting process to assess risk and determine premiums. Option B is incorrect as insurers are not typically required to disclose specific conditions that may lead to higher premiums, although they must inform applicants about the underwriting process. Option C is misleading. While insurers can contest claims based on material misrepresentation or non-disclosure during the contestability period, they cannot arbitrarily refuse coverage after the policy has been issued. Option D is correct. Insurers are required to inform applicants of their rights, including the right to request copies of their medical records, fostering transparency in the underwriting process. Question 8. Claims process. If a beneficiary files a claim for a death benefit under a term life insurance policy, which of the following factors would most likely delay the processing of the claim? A. The beneficiary's relationship to the deceased being questioned. B. The deceased had previously taken a policy loan. C. The claim is filed immediately following the death of the insured. D. The insurance company has not yet received the initial premium payment. Answer A. Explanation. Option A is correct. If there are questions regarding the beneficiary's relationship to the insured, E. G. If the beneficiary is a distant relative or if the relationship is contested, this could delay the claim process while the insurer verifies the claim. Option B is incorrect. While a policy loan may affect the death benefit amount, it typically does not delay the claims process unless there are additional complications. Option C is incorrect. Claims filed immediately after death are standard and do not inherently delay processing. The insurance company should be prepared for timely claim submissions. Option D is incorrect because the insurance company does not require payment of the initial premium if the policy is active and in force at the time of the insured's death. Question 9. Problem-solving skills. During a client consultation, a 45-year-old male expresses concern about the adequacy of his current term life insurance coverage. He has 2 young children and a mortgage. He is also considering additional coverage. What should be the insurance advisor's first step in addressing this concern? They suggest increasing the term length of his current policy without further assessment. B. Conduct. A thorough analysis of the client's financial obligations and future needs. C. Recommend the cheapest term life insurance option available. D. Encourage the client to cancel his existing policy immediately to start fresh. Answer. B. Explanation. Option A is incorrect, as simply increasing the term length without assessing the client's actual needs may lead to inadequate coverage or unnecessary costs. Option B is correct. A thorough financial needs analysis is essential to determine how much coverage the client needs, taking into account his dependents and existing financial obligations, thus ensuring appropriate and sufficient coverage. Option C is incorrect, as selecting the cheapest option may not meet the client's specific needs and could lead to inadequate coverage. Option D is misleading. Cancelling the existing policy without a thorough understanding of the client's current coverage and needs may leave him vulnerable in the interim. Question 10. Critical thinking abilities. In considering ethical practices in the sale of term life insurance, which of the following scenarios best illustrates a conflict of interest? A. An insurance agent recommends a policy that offers a higher commission but is not the best fit for the client. B. An insurance agent only sells policies from one company without considering other options for the client. C. An insurance agent discloses all fees and commissions to the client prior to the sale. D. An insurance agent actively engages in continuing education to better serve their clients. Answer A. Explanation. Option A is correct. This scenario illustrates a conflict of interest because the agent's personal financial gain, higher commission, is prioritized over the client's best interests, potentially leading to inappropriate recommendations. Option B is incorrect, as selling policies from one company is not inherently a conflict unless it involves misleading the client about their options. Option C is incorrect because full disclosure of fees and commissions is an ethical practice that helps mitigate conflicts of interest. Option D is also incorrect, as actively pursuing continuing education is a positive practice that benefits clients and does not indicate any conflict of interest. Question 11. Policy conversion. Which of the following statements accurately describes the conversion option in a term life insurance policy? A. It allows the policyholder to convert to a whole life policy without evidence of insurability. B. It requires the policyholder to pay an additional premium for the conversion feature. C. It can only be exercised within the first year of the policy. D. It guarantees coverage for the insured's lifetime once converted. Answer A. Explanation. Option A is correct. A conversion option typically allows the policyholder to convert their term policy to a permanent policy such as whole life without providing evidence of insurability, making it beneficial for those whose health may have changed. Option B is incorrect because while some policies may have a cost associated with conversion, it is not universally required. Option C is incorrect. The conversion option can usually be exercised at any point during the term, depending on the policy provisions, and not limited to the first year. Option D is misleading. While converting to a permanent policy provides lifelong coverage, the specifics depend on the policy terms and conditions. Question 12. Underwriting process. What role does the underwriting process play in the issuance of a term life insurance policy? A. It determines the initial premium rate based solely on the applicant's age. B. It assesses the risk associated with the applicant to determine eligibility and premium rates. C. It guarantees the policyholder will receive a payout upon death. D. It eliminates the need for a medical examination in all cases. Answer B. Explanation. Option A is incorrect because while age is a factor in premium determination, underwriting considers a broader range of factors, including health and lifestyle. Option B is correct. Underwriting assesses the risk associated with the applicant, taking into account health history, lifestyle choices, and other factors to determine eligibility and set appropriate premium rates. Option C is incorrect. Underwriting does not guarantee a payout, as claims can be denied based on non-disclosure or policy exclusions. Option D is incorrect. While some applicants may qualify for simplified issue policies that do not require a medical exam, many still do, depending on the insurer's requirements. Question 13. Beneficiary designations. In New York, which of the following statements regarding beneficiary designations in term life insurance policies is true? A. Beneficiary designations can only be changed with the consent of the current beneficiary. B. A policyholder can designate multiple beneficiaries and specify percentages for each. C. Only individuals can be named as beneficiaries of businesses cannot be designated. D. The insurer is responsible for determining the validity of the beneficiary designation. Answer B. Explanation. Option A is incorrect. A policyholder can usually change beneficiaries without the current beneficiary's consent unless the beneficiary is designated as irrevocable. Option B is correct. Policyholders in New York can designate multiple beneficiaries and specify how the death benefit is to be divided among them in percentages. Option C is incorrect. Businesses can be named as beneficiaries, along with individuals. Option D is misleading. While insurers will review beneficiary designations, it is primarily the policyholder's responsibility to ensure the designation is valid and reflects their intent. Question 14. Premium payments. What are the consequences of failing to pay premiums on a term life insurance policy in New York? A. The policyholder will receive an automatic grace period of 60 days without penalty. B. The policy lapses and coverage is terminated unless reinstatement occurs within the allowed period. C. The insurer will continue coverage but will charge a higher premium for late payments. D. The policyholder will receive a refund for all premiums paid if the policy lapses. Answer B. Explanation. Option A is incorrect. While many insurers offer a grace period, it is typically at least 30 days, not 60. Option B is correct. If premiums are not paid, the policy will lapse, meaning coverage is terminated. However, many policies allow for reinstatement within a specified time frame, typically within a few years, provided certain conditions are met. Option C is incorrect. Insurers do not usually continue coverage after a policy has lapsed without premium payment. Option D is incorrect. If a policy lapses, premiums paid are generally not refunded unless specified under certain conditions. Question 15. Coverage options. Which of the following best describes a level term life insurance policy? A. The premium remains constant, but the death benefit decreases over time. B. The death benefit remains constant throughout the term, but premiums may increase. C. Both the premium and the death benefit decrease over time. D. The policy can only be purchased for a term of 10 years. Answer B. Explanation. Option A is incorrect. A level term policy features a constant death benefit, not a decreasing one. Option B is correct. In a level term policy, the death benefit remains constant throughout the term, while premiums may increase at renewal periods depending on the insurer's guidelines. Option C is incorrect. If both components, premium and death benefit, do not decrease in a level term policy. Option D is incorrect, as level term policies can be purchased for various terms, e.g. 10, 20, or 30 years, not limited to just 10 years. Question 16. Claims denial. Under what circumstances can an insurer deny a claim on a term life insurance policy after the insured's death? A. If the insured had a pre-existing condition that was disclosed during underwriting. B. If the claim is filed within the contestability period and misrepresentation is proven. C. If the beneficiary does not have a close relationship with the insured. D. If the insured passed away after the policy's expiration date. Answer B. Explanation. Option A is incorrect. If a pre-existing condition was disclosed during underwriting, the insurer cannot deny the claim based solely on that condition. Option B is correct. Insurers can deny claims filed within the contestability period, typically the first 2 years if misrepresentation or fraud is proven. Option C is incorrect. The relationship between the beneficiary and the insured does not typically affect the validity of the claim. Option D is incorrect. If the insured passes away after the policy has expired, the insurer will deny the claim, but the expiration is a clear condition for denial. Question 17. Insurance fraud. Which of the following actions constitutes insurance fraud in the context of applying for term life insurance? A. Providing false information about health status on the application. B. Accurately reporting all health information, including minor conditions. C. Comparing premiums from multiple insurers before purchasing a policy. D. Using an insurance agent to help complete the application process. Answer A. Explanation. Option A is correct. Providing false information about health status or other relevant details on an application is considered insurance fraud and can lead to denial of claims or policy cancellation. Option B is incorrect. Accurately reporting all health information is a requirement for a legitimate application. Option C is incorrect, as comparing premiums is a standard practice and is encouraged for informed decision-making. Option D is also incorrect. Using an agent to assist with the application is a common and legitimate practice in the insurance industry. Question 18. Conversion privilege. If a policyholder has a term life insurance policy with a conversion privilege, what does this allow them to do? A. Convert their policy to a whole life policy only during the last year of the term. B. Convert their policy to a permanent policy without proving insurability, typically within a specified time frame. C. Increase the term length of their current policy without additional cost. D. Transfer their policy to another person without losing coverage. Answer B. Explanation. Option A is incorrect, as conversion privileges can often be exercised any time before the term ends, not just in the last year. Option B is correct. The conversion privilege allows policyholders to convert to a permanent policy without needing to prove insurability, which is particularly advantageous if the insured's health has declined. Option C is incorrect. Conversion does not increase the term length of the existing policy but changes the policy type. Option D is incorrect, because conversion does not allow for transferring the policy to another person. It pertains to changing the policy type for the original policyholder. Question 19. Premium structures. What is the primary difference between annual renewable term ART and level term life insurance? A. ART policies have a fixed premium for the entire term, while level term premiums increase annually. B. ART policies are typically more expensive than level term policies over time. C. Level term policies offer consistent premiums and death benefits, while ART policies increase premiums based on age. D. Level term policies are only available for terms of 5 years, while ART policies can be renewed indefinitely. Answer C. Explanation. Option A is incorrect. ART policies do not have fixed premiums for the entire term. Instead, the premiums increase each year based on the insured's age. Option B is misleading. While ART policies can become more expensive over time, this is not a defining characteristic, since level term policies can also be more expensive initially depending on the insured's age and health. Option C is correct. Level term policies provide consistent premiums and death benefits for the duration of the policy, whereas ART policies feature premiums that increase annually as the insured ages. Option D is incorrect. Level term policies can be available for various terms, e.g. 10, 20, or 30 years, and ART policies can be renewed each year but do not have a specific limit on how long they can be renewed. Question 20. Term length. What is a common characteristic of a short-term life insurance policy? A. It typically provides coverage for a duration of 1 to 5 years. B. It guarantees a return of premiums paid at the end of the term. C. It can only be purchased by individuals under the age of 30. D. It automatically converts to a permanent policy at the end of the term. Answer A. Explanation. Option A is correct. Short-term life insurance policies usually offer coverage for a duration of 1 to 5 years, making them suitable for temporary needs. Option B is incorrect. While some policies might offer a return of premiums, this is not a characteristic of all short-term policies. Option C is incorrect. There are no age restrictions for purchasing short-term policies. They can be obtained by individuals of any age. Option D is incorrect. Short-term life insurance policies typically do not convert to permanent policies automatically. Policyholders would need to apply for a new policy. Question 21. Contestability period. What is the typical length of the contestability period for term life insurance policies in New York? A. 1 year. B. 2 years. C. 3 years. D. 5 years. Answer B. Explanation. Option A is incorrect. The contestability period is generally longer than 1 year. Option B is correct. The typical contestability period for life insurance policies in New York is 2 years, during which the insurer can investigate and deny claims based on misrepresentation or fraud in the application. Option C is incorrect. While some policies may have longer contestability periods, 3 years is not the standard. Option D is incorrect. A 5-year contestability period is uncommon for term life insurance policies. Question 22. Exclusions. Which of the following scenarios is most likely to be excluded from coverage under a term life insurance policy? A. The insured dies in a car accident while driving. B. The insured dies due to a heart attack after 3 years of having the policy. C. The insured dies as a result of engaging in a high-risk activity such as skydiving, if excluded in the policy. D. The insured dies from natural causes after the policy has lapsed. Answer C. Explanation. Option A is incorrect. Death from a car accident is generally covered unless specifically excluded. Option B is incorrect. Death from a heart attack after the policy has been enforced for 3 years is typically covered unless there is evidence of misrepresentation. Option C is correct if the policy specifically excludes deaths resulting from high-risk activities. The insurer is likely to deny a claim resulting from such an incident. Option D is incorrect. Deaths occurring after the policy lapses generally are not covered, but this is not a scenario for exclusion based on activity. Question 23. Riders. What is a common rider that can be added to a term life insurance policy? A. Waiver of premium rider. B. Accidental death benefit rider. C. Long-term care rider. D. Both. And B. Answer D. Explanation. Option A is correct. The waiver of premium rider allows the policyholder to stop paying premiums if they become disabled and their coverage remains in force. Option B is also correct. The accidental death benefit rider provides an additional benefit if the insured dies due to an accident. Option C is incorrect. Long-term care riders are more common in permanent policies than in term life insurance policies. Option D is correct, as both the waiver of premium rider and the accidental death benefit rider can typically be added to a term life insurance policy. Question 24. Group life insurance. Which of the following statements about group life insurance is true? A. Group life insurance policies are usually individually underwritten for each member. B. Group life insurance often provides coverage without requiring a medical exam for members. C. Group life insurance benefits are generally lower than individual policies. D. Employers are prohibited from offering group life insurance as part of employee benefits. Answer B. Explanation. Option A is incorrect. A group life insurance is typically underwritten as a whole rather than individually, which simplifies the process. Option B is correct. Group life insurance often allows members to enroll without a medical exam, which makes it more accessible. Option C is misleading. While group policies may have low benefits in some cases, they can also provide substantial coverage depending on the plan. Option D is incorrect. Employers are encouraged to offer group life insurance as part of their employee benefits package. Question 25. Insurable interest. What is required to establish insurable interest in a term life insurance policy? A. The policyholder must be related to the insured by blood or marriage. B. The policyholder must demonstrate a financial interest in the life of the insured. C. Insurable interest is not required for term life insurance policies. D. The policyholder must be the same person as the insured. Answer B. Explanation. Option A is incorrect. While familial relationships can establish insurable interest, it is not the only way to demonstrate it. Option B is correct. Insurable interest requires the policyholder to demonstrate a financial interest in the life of the insured, ensuring that the policyholder will suffer financial loss if the insured dies. Option C is incorrect. Insurable interest is always required at the time of application for life insurance policies. Option D is incorrect. The policyholder does not have to be the same person as the insured as long as insurable interest is established. Question 26. Policy provisions. Which of the following provisions in a term life insurance policy allows the insured to convert their term policy into a permanent policy? A. Conversion privilege. B. Extended term provision. C. Guaranteed renewability. D. Incontestability clause. Answer A. Explanation. Option A is correct. The conversion privilege provision allows the insured to convert a term life insurance policy into a permanent policy without having to provide evidence of insurability, usually within a specified time frame. Option B is incorrect. The extended term provision allows the policyholder to use the cash value of a permanent policy to purchase a temporary term insurance policy, not to convert a term policy. Option C is incorrect. Guaranteed renewability allows the insured to renew their term policy at the end of its term without evidence of insurability, but it does not allow conversion to a permanent policy. Option D is incorrect. The incontestability clause protects the insured from claims being denied due to misrepresentation after the policy has been in force for a specified period, usually 2 years, but it does not relate to conversion. Question 27. Risk assessment. During the underwriting process, which of the following factors is most likely to have the greatest impact on determining the premium for a term life insurance policy? A. The applicant's occupation. B. The applicant's age. C. The applicant's driving record. D. The applicant's health history. Answer B. Explanation. Option A is incorrect. While occupation can influence risk, age is typically a more significant factor in determining premium rates. Option B is correct. The applicant's age is one of the most critical factors affecting premiums, as younger individuals are generally seen as low risk compared to older individuals. Option C is incorrect. A driving record can impact premiums, especially if there are violations, but age is typically more influential. Option D is incorrect. Health history is indeed important, but age often carries more weight as it is a fundamental risk factor in mortality rates. Question 20. Policy loans. If a policyholder takes out a loan against their term life insurance policy, what effect does this have on the death benefit? A. The loan amount is subtracted from the death benefit. B. The death benefit is doubled to account for the loan. C. There is no impact on the death benefit. D. The policyholder must repay the loan before a claim can be made. Answer A. Explanation. Option A is correct. Any outstanding loan amount is deducted from the death benefit at the time of the claim, reducing the total payout to the beneficiary. Option B is incorrect. If the death benefit does not increase due to loans taken against the policy. Option C is incorrect. Loans taken against the policy directly affect the death benefit by reducing it. Option D is misleading. While repaying the loan will restore the full death benefit, it is not a requirement for making a claim, but the outstanding loan will reduce the death benefit. Question 29. Ethical considerations. Which of the following actions would most likely be considered an unethical practice in the sale of term life insurance? A. Failing to disclose a policy's exclusions and limitations to a potential client. B. Providing clients with comprehensive policy comparisons. C. Encouraging a client to purchase a policy that meets their financial needs. D. Offering a premium discount for multiple policies purchased. Answer A. Explanation. Option A is correct. Failing to disclose exclusions and limitations violates ethical sales practices and can lead to misunderstandings about coverage, potentially harming the client. Option B is incorrect. Providing comprehensive policy comparisons is an ethical practice that helps clients make informed decisions. Option C is also ethical. Recommending a policy that meets a client's needs is a fundamental duty of an insurance agent. Option D is ethical as long as the discount is offered transparently and within regulatory guidelines. Incentivizing multiple policies can be beneficial for clients. Question 30. Claims denial. Which of the following is a common reason for a claim denial in a term life insurance policy? A. The policyholder has made premium payments on time. B. The insured's death occurs during the contestability period due to misrepresentation. C. The policy is in force and active at the time of death. D. The death was due to an accident while the insured was on vacation. Answer B. Explanation. Option A is incorrect. Timely premium payments indicate the policy is active and should not lead to a claim denial. Option B is correct. If the insured's death occurs during the contestability period and there was misrepresentation in the application, the insurer can deny the claim based on that misrepresentation. Option C is incorrect. An active policy at the time of death ensures that the claim should be paid. Option D is incorrect. Deaths due to accidents are typically covered unless they fall under specific exclusions in the policy.